Good morning, traders. This is Brad Matheny. Today is the 23rd of September, closing in on the end of the month, and just spent a lot of time over the weekend with family. A nice, beautiful weekend out here in California. Moderately on the cool side for September. In the 80s, mid 90s. Beautiful, absolutely beautiful. A little hazy and lots of traffic. That's all I can tell you. Lots of traffic. But the weekend research seemed to indicate what I believe would be a fairly solid cleared runway for the markets. I think we're going to be moving into an uptrend, which is going to see the SPY move upward into the 580, 585 area, eventually targeting up here in the 595 and 600 area. I think we have to shake out a little bit of concerns over the next 2 or 3 days before we move into rally mode. Really, I'm kind of expecting this period here, the 25th, 26th, and then we move into 27th Friday, and then that's the end of the month, moving to early October. And like I mentioned, by about this time, October 7th, 8th, 9th, I think we're going to be kind of topping. So you really have basically between the 24th tomorrow and the 25th Wednesday to be moving your assets in preparation for this move up. And then I think we're going to move into some rolling topping formation over here that's again slightly delayed. Now I've updated my analysis. I do this often. Remember, we talked about how the dual excess phase peak patterns over in this time frame, we were talking about how we had stayed below this level. This was rejection, the ultimate high level here, the red level. This was rejection. You remember how I mentioned last week we should stay out of the market. I had warned you to go ahead and move into a more cash position back over here, setting your cash on the sidelines, not getting chopped up. And I'm referring to a comment on one of my posts recently by someone who stated that I was not clear. You can be very clear that I was very clear about this rotation downward here, calling it the Kamala shakeout, called this bottom perfectly, got everybody into a rally here, hopefully telling you it was going to go back up, rolled everyone into weakness back over here, told everyone to readjust allocations higher here, and then start moving to cash towards the end of this week. I was telling you to basically prepare, and that was to move your capital away from risk, moving into a 60, 70, 80% cash position and waiting out the Fed move. Once the Fed move happened, we saw this market collapse a little bit. Then overseas markets caused this rally. And now that's why I think we're going to retest down in this area. I really do believe we're going to come back into this 563, 562 area, looking for a retest of these kind of a moderate price ranges in this yellow area, trying to build support off that area and then rallying upward. So I would urge you to be cautious again over the next 48 hours, possibly looking to build positions around lows, waiting for the lows to set up, and then potentially moving into an aggressive upward rally phase, really targeting this 585 level, then 595, then 605. Okay, so let's take a look at the QQQ. Pretty much doing the same thing, but we have not broken out of the excess phase peak pattern here. And again, let me explain to you what the excess phase peak pattern does. So the excess phase peak pattern is a warning of critical resistance taking place. It's really, you see all those guys on the channels talk to you about, oh, look, we've got this, and we can tell that all tops form like this. They get a little R shape, and then they roll down. and they form a bottom. Yep, every single move in the market looks like this. That's what the excess phase peak pattern is to begin with. It sets a peak here, it contracts a bit, it rolls into flagging, breaks away from flagging, then usually sets up a support level here, moves sideways, and then breaks down into this area. So those are your excess phase peak setups. You have your number one, you have your number two, the flagging, you have your number three, the breakdown of this area here, moving into the support area. So this is what we're looking at for number three. Then you have your number four, the flagging over in this area, sideways staying above the support level. And then you have your number five, which is the ultimate low. Now, what's most important here is to understand that when we're in this number two phase, the concept of being over here and waiting for this breakdown, this is the confirmation from a level two to a level three. It must get below this support level, and it must attempt to establish this lower support level called intermediate support. That gets us into a number three. If number three fails, we're going to get a rally. And what that rally is going to do is move above this previous resistance level and take off. And that's exactly what we saw back over on the SPY chart. Now, we do not have that on the QQQ chart. So understand, this is what the excess phase peak pattern is. All those other people going, oh, look, my research has shown that we do this, and this is what the markets do, and we're in this crisis mode. They don't really understand the pattern. Okay, they don't really understand what price does. And these happen over and over again. I've shown these to you over and over again. So look, here I can find them. An excess phase peak pattern sets up here, rallies up, comes down, starts flagging, breaks away, moves higher. Rallies up to an excess phase peak pattern, flags over, rolls down, never makes it to number three. You see right here, never broke down below this low, rallied higher and invalidated. It rolls over, flags again, rallies higher, rolls over, flags again, breaks down, sets up our new intermediate low, which is right here at three, and then invalidates on a huge gap up. Then rolls over, flags, breaks down, sets up a low, then invalidates. You see here, I've got one peak, two peaks, three, four. There's actually a bunch in here, but five. I'm just trying to show you these happen repetitively. Then eventually, right over here, we get this peak, we get our flagging, we get our breakdown to intermediate low levels here. That's our number three. It rolls sideways period of time, and then we get down to our ultimate low here. This is a completed 1, 2, 3, 4, 5 low pattern. Now, at this point, we're looking for it to find support and then move into a failed move. So here we go, up, rolls down, flags, breaks higher, we're moving higher. Breaks down, flags, moves higher, we're moving higher. Comes up, breaks down, flags, we're moving higher. Graded, we're moving higher. Comes up, moves down, flags, breaks out, we're moving higher. You see, guys, they happen everywhere. And this is a daily QQQ chart. So if you understand how these patterns work, you kind of get the basis for what's actually transpiring in price. Now, how can you play these? Well, you watch that flag. You watch this area. So let me come over here, spread this out. You watch this area right here at 2 to 3. You stay long through this. When it breaks below this level, you're looking to get out, and we're going to see if we get to here. And if it revalidates back to the upside, you try to get back in. And this is really the area right here that is the most dangerous. It just goes 1, 2 and rallies, no big deal, let it go. If it goes 1, 2, 3 and comes down here, all right, now you got to be cautious. Now you got to cut your positions because it's likely going to try to make a 4 and a 5 down to these ultimate lows, which is exactly what happened right here. 1, 2, 3, sorry, 1, 2, 3, 4 breakdown, 5 ultimate low. Okay, so where are we at right here? We are in a massive peak running into flagging. We broke down. We have yet to reach this level, which is the 3. This is, again, the number 3. Remember, we're looking for it to break downward and come to a new lower low. That's what 3 is about. Now, again, we have a secondary excess phase peak here, still flagging, still in that flagging formation. We have yet to break down. We have yet to try to get to a 3. A 3 would be a move down into this area. Honestly, got to get below this low on a breakdown to get into a number 3, or have to get below this low here on the bigger pattern. You can see it here. There's one excess phase peak pattern, and then there's a second excess phase peak pattern here. We are above the channeling level. It does look bullish. That's why I think this next phase to the upside is going to be a pretty good rally. And that's why I'm urging traders to stay cautious, at least right now, because the QQQ has yet to really roll out of this mode. And as I mentioned to you, I'm trying to show you that, these patterns, and again, talking to these people that say, oh, this is just crayons. Yeah, okay. Go find somebody else to watch then. I'm out here trying to help you. This is stuff that I've learned and I've used for many years. It's not, this is not your normal stuff. And yeah, I draw a lot because I want you to see what's out there, not just, listen to some guy tell you that it's a proprietary trigger. I'm actually trying to help you become a better trader. And like I said, these excess phase peak patterns happen everywhere. And again, I can literally pick up any chart, and show you that these things happen. In fact, I'll try to do it on the next one, or something that's fairly clean here before I run out of time. Okay, so now we cleared all that out. We're still looking to get above this level. We need to get above up here, 490, 488, to try to clear this level here, moving back us into bullish bias, or we need to get down below this 447 to move us into bearish bias. Today, I think we're going to get a bit of a downward trend, try to fill this gap, retest this low area, kind of, if I could readjust this, I think we're going to trade in this area roughly for about 2 days. We're going to be trading and consolidating in this area, then move into a breakaway rally phase. And that breakaway rally phase, I think, will be very solid for the QQQ. So by Wednesday, Thursday, I think you're going to see a nice solid rally phase in the QQQ. Okay, let's go take a look at gold and silver. Gold and silver are going to push up into new highs. It's hard for me to explain unless you're following my more detailed research, but gold is going to consolidate over the next day or two, I believe. We're going to say in this rolling sideways trend as the dollar and the markets consolidate Monday, Tuesday. And then Wednesday, Thursday, Friday, I think we start to see a pretty good move in gold. I think gold makes an attempt up here to 2,700, 2,710 by about early October. This 2710, 2720 area marks a full 100% fib measured move. I think it's inevitable for gold to reach at least the 2708 area. But got to see what happens here. And remember, we're probably going to be pausing out over the next 1 or 2 days, setting up lows. Now, I don't expect the lows to be too difficult. 2630, 2640, maybe 2625 on the lows by Tuesday or Wednesday, getting a fairly deep low. But then I think we're off to the races. And then I think we're going to see 2680, maybe 2690. and then eventually 27.10, 27.15, maybe 27.25, and that's going to be the spiky top, the peak of the 100% move that's going to roll us back into consolidation. Okay, so silver, same type of setup. Boy, I got a lot of lines on here. Let's get rid of some of these. It's one thing I should do over the weekend is spend some time cleaning these up. So we're really looking at kind of the same setup with silver. Silver's had a good move. I mean, it really is. And I can almost just drag this over, kind of like this and say, there you go. That's your analysis. I had up kind of laughing. Yep, still battling that little sinus cold. Okay, so what we're looking at with silver's going to be tracking gold, but you really do have, and I'll just redraw it. You really do have kind of a day or two of consolidation. So expect some sideways trending for a couple of days, and then we're going to move into some rallying phase, probably up into this $33 to $35 area by early October. Now, once we get into early October, like I said, around the 10th through let me find it, here we go, the 10th through probably the 15th or 16th in this area, I expect it to be topping silver and metals and moving into some kind of I'm calling it a flash crash kind of event, but it's not going to be very deep. It's just ahead of the election. It's very common to see this type of activity, and this move in metals, as I had drawn way out here, may end up being closer to the election. So we may end up moving into this mode and then right before the election get some flash move and then basing and then break out. So be aware. I'm kind of watching for this move over the next 2 or 3 weeks, but I think we're cleared up until really around October 7th, 8th, 9th before this becomes more of an issue. Okay, lastly, Bitcoin. And I again will tell you that Bitcoin has reached its peak. I think we're looking at a real rotation here in Bitcoin. I think I mentioned this to you guys last week. Apologize, my sinuses are running a bit. But I think we're going to be rolling. So I'm going to just tell you right now, I think we're going to be rolling. And I think we're going to be rolling downward. I'll highlight this and highlight this. Where'd it go? So we're failing to get above this level. We have this downward channel that we've broken above. We've reached back up here into resistance. You can see we're failing up here, at least at this point. The markets are going to stagnate for the next couple of days. So, I do believe that Bitcoin is, even though I believe it's going to rally up eventually, I believe it is going to move into this consolidation phase. And I believe we're going to end up back into, I'm just going to redraw this coming out, roll back into this apex zone. See this apex here? I'm going to highlight this because we have continued to see price move towards this level. And I do believe we're going to see Bitcoin roll back down into the 60,000, 59,000, maybe 5850 area, trying to build some sort of a base over here like this before it attempts to make another move. And I think that's inevitable with regards to the market trend. Now you can see here we have kind of a inverted head and shoulders formation here. Okay, that's solid. That's perfect right along here. And you can see how we've actually moved, from this deeper low to this deeper low to that deeper low to that low. Now we set up this low and then we rally. And in my opinion, that makes a lot of sense. That makes a lot of sense for me, in the sense that we get these three surges downward and then we get the three from here, the 1, 2, and then finally we get the 3 rally phase up here. So I would be looking for a rally phase to start right in this October 29th, 10th. Yeah, maybe a little later. So let's call it 8th, 9th, 10th, 11th, somewhere around this area right in here. I would be looking for basing, bottoming, and a new rally phase to set up. In the meantime, I believe we're going to run into this rejection. And again, we have kind of an excess phase peak pattern with a breakdown here, rallying up, setting up a new base, a moderate base, rallying upward. So you could argue that here's another excess phase peak phase rolling over, and we would have to watch this level to the downside. I don't think we get there. I think we roll, find support, base in this area, and then roll into a rally phase back up and out. Okay, so very clearly, I'm giving you 2-3 weeks of advanced expectation, telling you what's going on. It's your job to time it. It's your job to figure it out how you want to trade it. And to those people who think I'm drawing crayons and not giving any real information, ask yourself, who else can come out here and tell you every day what the markets are going to do and factually back it up with price patterns and technical analysis. I mean, I can go deeper and deeper and deeper, but you don't have 4.5 hours to listen to me because I've been doing this for 35 years and I can pretty much pick any chart. I don't care. Pick something. I got 4 minutes left. Let's figure this out. Let's go IXB. Let's pick a symbol. I don't care. I'm trying to figure something I've never seen before. PLO. I don't know. So NYMEX off calendar peak. I don't know. That's not where I came up with that. Let's just go to IBM. What the hell? Let's go to IBM. All right, daily. First off, let's look for excess phase peak patterns. Looks like I've been drawing something here before. Excess phase peak pattern here. You can see it, pullback, flagging, carried up, pullback, flagging, paused, rolled down, rejected off of that support, rallied back up out, come back here, pause, pullback, rejected, rally. So here we are. We have a bit of a pullback here. You can see we rallied all the way up. We've got a bit of a pullback. We rallied into this area. We're not above the high. We're not below the low. So we are in the midst of sideways trending. We do have Fibonacci price series new high here, new higher lows. So we're in a general uptrend. We do have a recent anchor bar right here, which is telling us that we're in an uptrend. We're above the Fibonacci price levels. We do have an ultimate high level recently reached right here, which is this level here. Ultimate highs are good. Ultimate low would be right down here. Ultimate high would be right up here. Oops. And I can tell you that given the strength of the US dollar and given what I believe is going to happen based on the shifting of the US Fed lowering rates, I would suggest that you are going to be expecting, if I spread this out, you should expect moderate rotation for 2 or 3 days, maybe 4 days, rolling into a bit of a rally phase here. Now, I do not expect blue chips to really start to rally until mid 2025. So you're going to be battling a slow melt up in IBM. It's not going to be as aggressive as, say, Google or Tesla or Nvidia or something of this nature. But again, I can pick any chart apart, and it's because I have the skills and the knowledge after 35 years to see what's going on behind the scenes. Next target here would probably be 228, 226, 227, 228, right up in this area. It'd probably be by mid October. Okay, guys, that's it for now. I'm going to go back here to SPY and get another cup of coffee and go from there. So let's go get some today.